minute, 15, 30, 1 hour, 2 hour, 4 hour, daily, weekly. Now we trade on the 5-minute chart. So what that means is every single one of these lines, these vertical lines, is called a candle. And every single one of these takes 5 minutes to form. And over here, you'll see a countdown timer, look, 1 minute 10 left on the current candle that's forming. So it doesn't matter how big or small these are, every single one of these has taken 5 minutes to form. Now, the blue ones means the market is going up. There are buyers in the market. And the grey ones means the market is going down. There's sellers in the market. Now, all of this that you see in front of you here is what we call price action. So when you hear me talk about price action, I'm just talking that the action that price is taking in a given moment. So that's the basic. Now, all of these are what we call fractal as well. So if we go to a 30-minute chart, you'll see every single one of these candles has taken 30 minutes to form. And you'll see the chart still looks quite similar, yeah? Go to a 4-hour. So now what we're looking at is every single one of these candles has taken 4 hours to form. And again, we'll go back to the 5-minute, and I'm just going to go back over here to show you the start of. Now, what markets tend to do, they always move up and down, even when they're moving sideways. So sometimes you'll see the price action will just be going across the screen. This is something we call consolidation. We don't want to be trading in here. You will get your backside handed to you on a plate. Now, you know when you're in consolidation and when you're not to trade, because you see this black line. I'm going to get to these EMAs in a minute. But when this black line, when price action is sort of running through it and it's running through price, we like to avoid it because it means we're in something called consolidation. Now, for this strategy, I use what we call indicators. So 3 indicators. I'm just going to make one of them a bit darker so you can see it. The reason I use these is so it gives you a visual reference on the chart, and then it also gives you a space to put an alert. So you don't have to sit staring at the chart all day. You can set alarms on these particular indicators. Now, this big puffy blue cloud at the back is called a Bollinger Band. You don't need to know the names. It is just here to give you visual reference and set alarms on. Now, with this particular strategy, we use the Bollinger Band for what we call pullbacks. And all pullbacks is a place in the market where, for example, like the price action has gone up here and then it pulls back down. So imagine that's like an elastic band pulling back, and then it's going to ping off in the other direction. You get little diddy pullbacks, then you have big pullbacks like this in the market. All right, so that's all a pullback is. And if you look at where's there a sell chart? Let me just go to the sell portion of this. So if we're looking at price action going the other way, so we're now in down sell mode here, pushes down, elastic band pulls back, pushes down, pulls back, pushes down, pulls back, pushes down, big pullback, away it goes again. All right, so that's the basics of what a pullback is, and that's why I use the Bollinger Band just to set alarms and give you reference. The other indicators we have on here, and these are guidelines. So we've got a long running EMA. Now, an EMA is just an exponential moving average. You don't need to know anything about these, only that it shows you the moving average of the last however many candles related to it. So this is a long-term one. So this shows you a couple of 100 candles, and these two are short-term EMAs. So the red EMA and the blue EMA, they just show you short-term candle movement. So they give us an idea when we start getting a bit of what we call volume in the market and price is going to go where we want them. And I use them in quite a specific way. So how this strategy works, when you come to the chart, wherever you arrive at the chart in the morning, oh, sorry, and we have the MTFTI as well. This indicator down here is a cheat. You have to excuse me, guys, it's a bit late in the evening that I'm doing this. So this indicator down here is a bit of a cheat. With this trading strategy, we pretty much want everything from the 1 minute to the 4 hour showing us that it's heading in roughly the same direction. So that means that this indicator is set relevant to this long EMA. So every time all the price action is above it, you'll get the green. And every time the price action is below it, you'll get the blue. Well, you do on my chart, you set them up how you want. So the strategy, we want everything really from the 1 minute up to the 4 hour. There are certain nuances around daily candles, but I'm not going to go into that on this video. So 1 minute to the 4 hour, we want showing up. So we know roughly all of our price action is going in the right way. Then when you get to the screen, the first thing you do is you come to your alert up here and you want to set an alert for price crossing. We want our Bollinger Band and we want the lower, you come to this bit here and you tick the lower Bollinger Band, then you press create. Now what that'll do is it'll alert you when price action, like it has here, it hits the lower part of the Bollinger Band. Once it's done that, we want the lower part of the Bollinger Band on a buy because we want the elastic band to pull back to then ping up. So that's our first signal. Then the next signal we want is we want to cross of these EMAs. After it's done this, we want to know when the EMAs cross. So we have the red EMA above the blue EMA for a buy situation. So again, once you've had your first alert, then you come back to here and this time we want to go for our EMAs. So mine is EMA 1, crossing the value, which will be my EMA 2, and I press create. Then what happens is I'll get an alert on this candle or this candle. Can't quite see which one crossed over, where the EMAs have crossed. Now, when that happens, I'm now looking for an entry point, and I want to enter within 5 candles of that cross, really. So no more than sort of here. Yeah. I don't want to be entering somewhere up here of the screen. The closer to this cross, the better, to be honest, because if you were entering, can't really give you, let's have a look. So for example, down here, if you were entering up here, you'd be at the top of a move before a pullback. Yeah, so we really want to be as close to this cross as possible. So when this has happened, we always wait for the candle to close. And what I mean is you wait for the timer to run down till it's hit 0 and that candle has finished forming. The reason being, if you don't, the candle could reverse on you and take you out your trade. So then you come over to your toolbar over here. You will take a long position because we're going up. So if it was this candle we entered on, I do not trade more than a 10 pip stop loss. Now the stop loss is the blue part on mine. It'll probably be red on your chart and the green bit is my take profit. See this number here, it says 9.4. I do not want that any bigger than 10 pips. Let's see, it's moving up and down. Reason being we're scalping. Yeah, we're not swing trading or anything, so we don't want big stop losses. This is like your insurance policy. So if this trade went the wrong way, you would only lose this percentage of your trade. You wouldn't lose your whole account. Then we go to a 1 to 2. By the way, guys, I am not a financial advisor, so nothing in this video that I'm offering you is financial advice. Never trade with more than you're willing to lose and always use demo accounts when you're learning. Right, so basically, 1%, I only ever trade 1%. I recommend that to everybody. Never trade over 2% max, whatever you're doing, but 1% is just really good. So I'm risking 1% to make 2%. See, the risk to reward ratio here is at 2, yeah? Now this information I will then take over to my broker feed and put into my live broker for my live trades. Trading view is just where we set our trades up and we analyze charts. So as you can see, this trade, we set it here, we set our stop loss here, 10 pips, the trade ran, and then it closed here. So we came out of 2% profit. So that is a buy example. And then what page did I have for sales? GBP Sheffield. Dear God, look at the state of that. No idea what's happened to the market today, but we're still going to have a look. So on this, everything now is down. So everything is showing down. So from the 1 minute to the 4 hour is showing down. We actually have a crossover here at the moment that is running at the minute. Might run into here, actually. That would have been quite a nice little trade. So same strategy, but this time we're going the other way. So the first thing you do, you come to your chart, you set an alert for a Bollinger Band pullback. You would have had that up here. And then we're looking for a crossover. So an alarm for a crossover. You would have had that on this candle here. This time we would be going for a short position. And again, no more than a 10 pip stop loss. Wait for the candle to close. Cover the wick, that'll do on that one. And we go to a 1 to 2, which is as good as damn it there. All right, so this one you'd have entered there, stop loss above the candle. 1 to 2 down to here, look, risk to reward. So it's trade number 1. Get rid of that box. Oh, actually, I'll keep that box because we'll use that in a minute. So then let's have a look at what we've got now. You would have had another pullback through your Bollinger Band here, across up and across down. So this would have been another entry candle over here. I wouldn't be trading this section because it's in consolidation. We covered a wick at a candle. We go for a 1 to 2. You would have squeezed a 1 to 2 out of there. I would not have taken that trade though, because can you see price action is going sideways? There are a lot of nuances. We want this type of action with the EMAs. You know, we want them opening up a little bit. But yeah, sorry again for sells as well. You want the crossover, you want the blue above the red for a sell. So you could have had another trade in there. That would have been a tight trade. I personally wouldn't have traded that, but that is one. And then we have another pullback here through the Bollinger Band 2. So then we would be waiting for a crossover, which is this candle here. So we actually have a trade running now. Where's the stop? Where's the on the top of the wick on that candle? 1 to 2 is there. Actually, that'll probably have that. You could have had a nice little, you see the candles pushing down now. So we'd had a nice little trade on that one while we were watching. So that's entry model 1 for this. Now I'm just going to go and have a look at, where can I show you? I'm trying to find some decent re-entries. The market is just, it's been horrendous this week. Oh, here we go. So I need to find you some sell retests. Bear with me, guys. Something decent for you to look at. These are all red EMAs. I'm trying to find some blue EMA retests. Forgotten here. I'm gonna have to show you red ones because these are all, I wouldn't have been trading any of this today. It's been a funny old day. So retest entries now. Once you've had your initial crossover, if you miss this, because these do come around, but you know they happen every probably like 4 hours or something. So if you come to your chart and you've missed your initial cross, you can take up to 3 retest entries on the way down. Now, what we consider a retest entry is when price has gone down, then it pulls back and it touches either the red or the blue EMA. Now, you have to journal this to decide what you like. I normally only trade the blue EMA on franc pairs. I tend to trade the red EMAs on JPY pairs. USDs I trade the blue, but you have to journal this stuff. Very important journaling. So all that happens is as price comes back, what we want to do is we want to enter off the first candle going in the direction we want with a rejection on the top of it. So that would be this candle here. So same thing, you come and get your short position. With these retest entries as well, you can go really tight on that candle. As soon as it closes, go as tight pips as you want, because the retests are the ones that have cleaned up price action on the left hand side, so taking out fair value gaps, leveled out bankers candles, things like that. You don't need to know about that. But these retests normally, the majority of the time, will not come back on you and tap you out. So that would have been retest number 1. Little 2.2 pip stop loss, a 1 to 2 again, 2% profit. This is retest number 2. This is a nice clean one actually. So you've got the rejection off of the candle before, and then this is a really clean sell candle. So again, we wait until the candle closes, we go in the bottom of that, top of the candle, 3.9 pip, a 1 to 2 again, it's round about there. Look. So that's your retest. You have got another retest here as well. Again, this one, I would take this one. This is the 3rd one down. Can you see you've got a big rejection wick going down? All that means is the buyers have tried to come in the market and the sellers have gone no. And they've pushed it the other way. And even though this has got a rejection, because of that one before it, I would be happy with this. You could wait for the second one, but I really don't like waiting for these second candles on these retest models. I like to be in on the first one. So for me, I would have traded that. Some people might not have. I'm quite an aggressive trader though. So, you know, you have to journal this stuff and make your decision on it yourself. But that would have been your next trade. So it's a 1 to 2 again, 1.8 pip stop loss, 1 to 2 risk to reward ratio. In you go. So that's the red EMAs. I'm trying to find some blue EMA pullbacks. Oh, look, there you go. Our trade's just finished. So there you go. That's the strategy running out in real time for you. See if AN has got some. Have a look over here. See if this was a. Here you go. This has got a couple of nice. One nice anyway. It's got one nice one to show you today. So this is a blue EMA pullback. So as you can see, pushed up, price has come back. It's gone through the blue EMA. I mean, this is proper tatty, to be honest, tatty price action. Don't like any of this whatsoever, but I am showing you the strategy. That's a big ass candle as well. So I would be really bothered about that. It's a big old stop loss. Personally, if you know about fair value gaps, I would be just under 50% of that fair value gap. All a fair value gap is, you see where you get these big long candles with no wicks either side of them? It just means there's imbalanced price action, which means they tend to get what we call wicked back into. When I see a candle like this, to me, in my head, I'm always thinking, like over here, can you see this wick has come down and cleared these two? Yeah, I'm always a bit cautious and I think, it's a possibility I could get wicked out on that one because that's a big candle. So I always go cover just under 50% of it. I'm going to go minimal stop losses on that because it lowers it lowers, it's still 1%, but it's smaller stops. So you'd just squeeze the 1 to 2 out of that. Then we do have another one here. This is a Bollinger Band pullback followed by a crossover, and it's sort of like a blue EMA as well. So, you'd be warranted to go in on the top of that candle, right up under that candle as well on the wick, and a 1 to 2. Just gonna damn it around about there. So I think this is news here. So you'd have been in on that again. But again, we only take you'd only want to take 3 of these. Just because, you get knocked out. If you were on this one here as well. So if I was trading that, I would have been out of that trade probably. I'm being honest with you guys. If I'd have gone in, I wouldn't have gone in because of what the EMAs and this price action looked so ropey. But I would have been probably up the backside of that candle there. So can you see this price action here would have taken me out? If you were using what we call a structural stop loss, so if you covered these wicks here, you'd have still been in the trade. So again, I'm a very aggressive trader. And obviously I've traded this strategy for a long time. So you have to sort of work out for yourself how you want to trade it. And then I just want to show you consolidation. I know gold was consolidating today. It just looked absolutely horrendous. Here you go. When you see stuff like this, and you've got this black EMA is running through the middle of price action, what we tend to do, I'm just going to get rid of this box and put it back on again. Come back over here to the left-hand side, and you can set a box around this stuff. And then what you can do is you go to your alert panel, and then you want price. Hang on. Sorry. Add alert on rectangle. So you add alert on rectangle, and what I want is price exiting the rectangle, and then I press create. And all that does is when price action moves out of that, it will give me a shout. So that's really, really helpful when you just see all this type of price action, because like I say, with this strategy, if I just remove that, with this strategy, you'll see that through here, even though that's showing down, you're going to get pullbacks through the Bollinger Band and crossovers. So you're going to keep going in trades and getting knocked out. Pullback, crossover, go in the trade, get knocked out, yeah? So one of the main reasons a lot of people struggle with this strategy to start with is because they're trading in this mess here. So, yeah, avoid that like the plague and get the hang of setting alarms around it. And then you shouldn't go too far wrong with it. Just want to have a look at, I wasn't going to look at points of interest really, but sometimes what you will find as well, let's just have a look at this without going into too much detail. I could give you technical names for everything all day long, but it will just confuse you and it won't make you a better trader. It's as simple as that. learning patterns and being able to get your eye around this strategy is what's really going to help you. So sometimes you'll enter a trade, like if this was a red EMA and you get knocked straight out, and you'll see that you've got a lot of wicks, up wicks that are then pushing price action down. What I tend to do in places like this is I'll stick a horizontal line on it, and I just want to go and have a look on the 4-hour and just have a nose and go, what is that I'm getting knocked out of? Because what you'll find is these are what we call points of interest. So when the price action comes up to a certain place on a higher time frame, it is a decisional place. And all that means is the banks use it to take orders out the money, take stop losses off of people, move their money about, or put orders in, take orders out, all that sort of thing. But these particular points in the market, especially when we're scalpers, if we're not aware of where these are, what will happen is you'll be trading into them quite blindly, and then you'll get knocked out of the market and think, what on earth happened there? It's just because you are coming into a point of interest on a higher time frame. So what I do teach, and I only teach this to students who continually get knocked out in certain places, is I'll teach them how to see these. So if I just drop, I'm actually just going to drop all of my indicators off the screen a minute. Let's get rid of this. So if you notice, price goes up, hits a point, and then it comes down, then it goes up, then it comes down, then it goes up, then it comes down, then it goes up, then it comes down, yeah? This is how price moves. And what it tends to do is it will always come back into a certain point. So you see this big candle here has got no wicks covering either side of it. The wicks stop. So that candle's just a clean candle all on its own. Now, if I put a horizontal ray on this, about 50% of that candle, where's 50% of that candle? You'll see that this price action virtually comes up and taps it before it goes again. So this is what we call a point of interest. It's actually a fair value gap, but everything I'm just going to term as a point of interest for you guys. Also here, look, can you see all the way across here, actually, if I drag this line all the way across to here, can you see how many times price has come in and tapped it from below and above? Yeah. So this, again, it's like higher time frame consolidation. There's a lot of what we call orders in the market here. Consolidation again here. It's coming up. It's like a ceiling. It bangs into it. It was a floor here, look, and then it becomes a ceiling here and pushes down again. And then you'll see it down here, look. Does the same thing here. You've got this lines up here. So you've got a good few hours worth of trading. We just go across the screen. It's probably 5 days away. So on the 5-minute, can you see what that looks like? Yeah, that was on the 4-hour. That was only like 4 candles on the 4-hour. But on the 5-minute, that's what that price action looks like. So when it's in one of those areas, you're going to keep getting in the trades and thinking, oh yeah, the trade's going, and then it'll come back up again and tap you out. Then you might get a run, then it will come back into that area, and then it will start really, really going. So that's a little bit on POIs. I'm not going to go into too much detail, but if you keep getting knocked out the market, go and have a look and see where you are. And if you mark up some of these as well. So now if we're looking at trading cells, if we're looking at, this is a 4-hour candle, so there's a lot of 5 minutes in that 4-hour. We can see now we've got a floor down here that I marked up on the 4-hour. So if we're looking to sell off now, I would be quite happy to take sells down to this sort of area before I'd be starting to think, maybe I'll leave that. So a little bit of info. I don't want to give you guys too much, but you've got the basics of the strategy now. And yeah, I hope you enjoy it, guys. Hope you enjoy it. We're going to be bringing out some more videos around this stuff that I'm going to share with you lot. And there's going to be some real basics and then some really in-depth stuff. So happy trading, and I will be back soon.